Hi guys, today we will discuss Bollinger Band. We will understand Bollinger Band. Now, how does Bollinger Band works? Number one thing is once the price crosses the Bollinger Band top, it moves up. Number one thing. Number two thing is this red line. Now, to explain you the numbers, this red number is red line, this top number is top Bollinger Band, and this last number is lower Bollinger Band number. Now, once the price crosses the Bollinger Band on top, it usually rises up. And as you can see right here, the Bollinger Band started to contract. It started to go lower. It started to contract. If you could look at it, right here, it was the least space in between. Right here, it's the biggest. And then it's now again contracting. Now, whenever it is contracting, it means straight movement. Whenever it is going up, it's expanding, the price usually moves up or down. As you can see, once the price went lower, here 86.26, it remained within that same period. $80 was like the low here. It never went up. So if the price goes below the Bollinger Band, then usually it means it's going lower. But this is a cryptocurrency, and in cryptocurrency, due to excessive buying, it never went lower. But if you focus on it, it never went higher as well, which tells you that the first thing, the first important thing, that if the price goes below the Bollinger Band, then it won't rise up. If it crosses the Bollinger Band up, then that's the rising trend up. If the Bollinger Band contracts, like example here, it contracted, the price went straight. For the next 6 weeks, the price never changed much. This was 116.55 and this was 109.69. So it's only a $7 fall. That's 5-7%. That's not huge. So you have to remember, Bollinger Band is your best friend. Once you will be shorting something, then the real fall will start once the price goes below the Bollinger Band, not once the Bollinger Band contracts. Now once it contracts and our secret sauce method tells us that it's time to short sell, then you will short sell. But you will remember that at that time, it won't fall like a knife down. It won't. It simply means that the upward movement has stopped. And now you need to remember what will happen lower. Now, if you look at it here, in 2007 October, once Citigroup went below the Bollinger Band right here, if you would have short sold it, let's say here, 512 or here at 465, and once the price went lower, it went to $15, the least. If you would have short sold it, let's say here, then as the Bollinger Band has contracted, the price went straight. It never made major changes down. So if you would have shorted, let's say here at 477, then you would have squared it right here at 463, somewhat around that level. So you can see simply that if Bollinger Band contracts, then the price goes straight. If the price goes above the Bollinger Band, then usually it's a rise up. Example you can see right here. If it goes below the Bollinger Band, then it's a fall down. So according to short selling, our aim will be to short it within the Bollinger Band, and we believe that the fall will come once the price fell off below the Bollinger Band. Then the major fall will come in, not above within the Bollinger Band. So this is really important for your trading stuff. Now, this doesn't mean that it will always follow that. Always remember, please, it won't mean that it will always be going for that purpose. No, it won't. Example right here, it went up and rose higher. So our assumption was correct. But if you look at it right here, it went up like a rocket. Right here, it went down like a rocket. But right here, it also went down. Here. But did it went down really like a rocket? Downward? No. It came back up. So These are the indicator that indicates you things. It won't mean that every time it will be the same. What it means is you have to understand what is happening. Now the red line. Whenever the red line moves down, it means there is a downward trend. Whenever it moves up, it usually means there is an upward trend. Number 2. What we discussed is whenever Bollinger Band contracts, then it usually means that the price will be going straight. That is straight like this. Whenever the lower Bollinger Band points downward, it usually means a downward fall is coming. Whenever the above higher Bollinger Band points upward, it means an upward movement. And usually an upward sign from the Bollinger Band means that the lower Bollinger Band will go lower. So it's simple. If the upper Bollinger Band points up, it's an upward movement. If the lower Bollinger Band points lower and the upper follows it on the lower side, then it means that there is a fall. Whenever the Bollinger Band contracts, as you can see the highs are getting lower, it means that the price will be moving straight. Until and unless the price goes below the lower Bollinger Band, then the fall will come in. So for a short seller, always the signal will be once the price is within the Bollinger Band. Now at that time, don't expect the price to make huge gains. And your point of risk is if the price goes above the Bollinger Band, because then you can believe that the price will move higher than your buying price. So that is the real danger. And your real friend is once the price goes below the lower Bollinger Band. Once it does that, then it means it's a complete going down period. So it's really simple, but it is something to remember. Price always does something. It cannot be nothing at all. And Bollinger Band is the first major indicator that tells you what can happen. But can you trade on it? That's the tricky part. Therefore, we have another tool which helps you understand what to do and when to do. Because if you won't, you will make the mistake. And that's why I tell you to follow the Bollinger Band but trade on the other tool. Bollinger Band is like a trade confirmation tool. As you can see, the trade was straight. Bollinger Band told you it will go straight. Once it went higher, it was a riskier move. So you will always rely on the other indicator, but Bollinger Band will be the indicator that confirms if you're standing on the right side or not. Because if you're making a mistake, Bollinger Band will be the first thing to tell you. As once the price crosses the Bollinger Band up, then it usually means you're on the wrong side of the trade. And if it goes down, as you can see right here, then it means you're on the right side. Example, right here, it went lower. Let me zoom in for you. Right here, it closed at 387.50 and the lower Bollinger Band is 393.77. The price went lower and the low here is 244. That's a huge low. Then the price came back up within the Bollinger Band, fell off, started to move up right here. And after this period, you can see that the Bollinger Band started to contract. Right here, it was 296, the lower Bollinger Band, 288, 279, 278. This is 278.36 and this is 278.55. So it went up, it contracted. Then again it contracted to 279.08 and again to 280.96. So you can see that the Bollinger Band started to move up. Before that, it was falling. This was 414, 393, 366, 342, 318, 310, 35. So it tells you that once it was going lower, it was your best friend. It was telling you that you were on the right side. Once it started to contract, it was telling you that, okay, there is some problem coming up. And, or initial indicator will always be the first indicator to tell you there is something wrong. Bollinger Band is the second indicator that informs you, okay, you're on the right side, you're on the wrong side, you're on the right side, you're on the wrong side. So this is important because these two advanced indicator will make or break your game and will change the profit and loss balance sheet completely. Now I would recommend you to just check it out. Just open a demo account or just take a pen and paper and buy and sell according to the strategy discussed in this course. Just like that. And see if you're successful or not. And this way you will also learn what your mistakes were. And once you will learn them, you won't make those mistakes in the real life trading account because those mistakes are the ones that cost you huge sums of money. Thank you.